Hello, hello, hello. Welcome to the Tesla live stream slash the company shall not be named. How is everyone doing today? Sorry for the delay. Our last live stream went over a little bit. Then, as I was ending it, the computer crashed. So I had to reboot and get everything set back up again. Thank you, everyone, though, who watched the market overview today. If you didn't check it out, you didn't catch it live, please go watch it because we had Bob Iacchino on, my business partner, who talks about a lot of macro and fundamental stuff that I do not talk about. He is more the expert in that, and I tend to gravitate more to the technical analysis side. So, Ken, welcome, welcome, welcome. Great market overview today. And let me know again, if you haven't watched it, please, and you want to see also what Bob's all about and everything else, please check that out. And if you did like it, please go back and leave comments on the videos and go back and like it so we can generate some more viewership for it. Thank you so much, Ken. Glad you enjoyed it. By the way, if you're new here, please do consider subscribing, ringing the bell, and hitting the like button. So it looks like stuff's still moving a little slowly here, but we'll get through it. We will get through it. We are professionals here. Shashi says, great market overview today. I liked it. Again, the more you can put that back in the comments, it's processing now on YouTube, but please take the extra 30 seconds when this one's done and go leave some comments under it so we can get it into wider distribution. That will really help. Not that Dave, thank you. Thanks for the super chat, Dave. Greetings and thanks for everything. Market overview is great. Good to meet Bob via video. He just adds different depth and perspective than I do. I don't get a lot into key fundamentals just because I'm not as good at it as he is. I just, again, I gravitate towards the testing, the technical analysis, the more stuff that it doesn't require uh, explaining things to people from a fundamental perspective. I do fundamental analysis, but I am not good at as good as articulating it as he is. So, hey, Wavy, Tesla, 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 great stream earlier. Thank you. Glad. And I'm going to be setting up a specific channel on our Discord server for Ask Bob. And we're going to compile questions. And, if we get enough questions, even have them on once every week or once every couple weeks, even for a 15-minute segment, then we'll do that. Okay? We shall do that. Sideways day to day, burning off some of yesterday, I guess. We'll get to Tesla. You two are a well rounded team. Thank you, Dave. And again, Dave, super chat, thank you. Hey, Dan Jet. I will get the channel up and running. Well, thank you, Wavy. I'm just really swamped tonight. So if you can put that in there and then remember questions for Bob, sort of, and I'm not talking, I mean, he might be able to answer a Tesla question or something else. He'll have his own thoughts on Tesla. But even macro, especially with this, could be a very interesting year versus 2021 and even 2020, where, I mean, since March 2020, we've been on this upwards trajectory, and we covered a lot of stuff in market overview about that. His thoughts for the year, his thoughts on bonds. And if you want to understand more about the yield curve flattening, and how you look at like the 2 versus the 10, the 5 versus the 10, the 5 versus the 30, and everything else, it's a fascinating little discussion on that. That being said, we're all here for, as Wavy says, Tesla, Tesla, Tesla. So, if it's not already demonetized, it sure is now. Little rally today. I'm going to continue a discussion I started yesterday because I really think it's helpful. And I'm going to intersperse some stuff too, just beyond the technical analysis, with some, again, more trading around a core position, how to manage positions, because I'm sort of seeing, and I'm not talking about anyone in particular. This is more of a macro observation that a lot of people may need at least some more insight on possible ways to manage trading around a core position, even managing a trade. I'm seeing too many people that are all in or all out. Now, there are specific patterns like double bottom patterns. Well, not even double bottom, because even with the rules we teach, your part, stop, raise, partial out, uh, rest out. But there's too many people who, when they're trading, and this is beyond this specific stuff I'm just talking about with Tesla or any other specific stock. It's just stuff, even beyond this live stream, I've been talking to more and more people, and they're trying to get in and then out, and they're also trying to call a top or a bottom and a top, and they think they have to call the bottom to be in the trade and call the top to be out of the trade, and that makes trading really difficult. So I'm going to follow up on some discussion yesterday with that too. Let's see. So we're still in bullish mode, although the rotation zone on the daily is flat, and that's what happens now that we're getting into this extended sideways move. We broke down, but now we're back in the channel right there. Let's just take a quick look at the weekly again. Weekly key line, the sand's up to 950. So that's really the first warning sign if we roll over and we get a close below that I'm watching. Other than that, I still have to stay with bullish mode, by the way. Like we touched on in the market overview, CPI numbers tomorrow morning, 8:30 Eastern, 7:30 Central. That's consumer price inflation. This consumer price index, really. But it's inflationary. I said inflation. It's the consumer price index, but that's going to be tied to inflation. So that could, depending on the print, roil the markets, and that's really what's going to help determine the direction in the morning. Other than that, you got to stick with here's the 1 hour Tesla chart. I'll get the other lines on there soon enough, but you can see here coming off the bottoms. Let me turn off. When everything crashed, everything just went haywire. Now stuff's, of course, reset for me. Caught between the 1 hour 50 and the first cross rising rotation zone in this little nice horizontal channel. So we had those buy patterns coming up here and holding. This is really nice because what kind of correction is this? We talk about two kinds of corrections: sideways or pullback. So far, this is a beautiful sideways correction. Earlier today in the Discord channel, I put in that was watching essentially right after the open. I just paid attention to the 15-minute rotation zone. That was going to be for a stop level, and we never closed below it. We closed at it in the afternoon, and then we finally rotated back up, but never a close below it. By the way, when I see this kind of price action in the afternoon, even if we stop below the 15-minute rotation zone, that was the key level I was using, this 1055. So and you can see here the harmonic 1072.67, that was from the lows back on the 10th to this high on today, the 11th, and that gave me 1072.67. Could not get really above there on a closing basis, and that was key resistance. Let me get into tomorrow what I'm watching for, and then we shall see. We shall see. Bullish line in the sand for, by the way, this 15-minute double is technically still in play, but you need a close below 1044.51. So I'm going to leave that on. So any weakness in the morning, that's the key area. Also, we'll touch on that with stops because that's a great place. If you haven't taken any profits from a move up and you're still holding, that could be a great place for a first or second stop. First thing tomorrow, I'm paying attention really at around this 1066 area. We start rallying above there. I'm then watching this 1073. This little minor resistance. We have a little resistance area, 1073 to about 1078. We get through 1078. Uh, let's see. I'm just going to go at this point, just looking here. I don't want to overclutter it. It's okay. Then we have the forward and reverse. All right. Above 1078, 1088 area, 1087, 72, which we have this little gap left behind. See right there. Let me switch cameras because I'm focused over here now. We have this little gap left behind right around that harmonic. So watch that 1087.82. Then the major cluster area, we now have 1097.50 to 1099.80. And above that, 1110.55. So that's all the upside. If we start breaking below 1055, I'm going to be focused on this 1044 because of the potential double top. We get a close below that, then I'm watching back to potentially this 1018 level. So that's where we're watching. My bullish line in the sand is actually, as long as we remain roughly above this 1055 area, I'm in bullish mode for tomorrow. Unless we have a really, I should say, because I can't say what print will be viewed as good or bad, but if we get a negative broad market reaction off the CPI print, I will get more aggressive with moving up remaining stops. Okay? Because especially if we start to see a downward pressure in the NASDAQ. If the NASDAQ holds, then I'm continuing to watch. We also have earnings. Remember, we have earnings coming up on Tesla. Again, when is that? That is the 27th so far, unless something's changed that I'm not aware of. Or the 26th, I think somebody, Wavy said, you said yesterday was the 26th. Has that been officially changed yet? Because I haven't seen the official announcement by Tesla, unless it came out since I was doing the last live stream. But traditionally, Tesla does rally into earnings. Now, if we roll over and have major selling pressure in the markets, and especially the NASDAQ, that will be headwinds to Tesla and still could drag it down. But to answer the thumbnail question night, I still expect higher prices. But this is where it is wonderful. This ties into my next comment. Where how do you manage a position? What do you do here? Because too many people are trying to buy a low, sell a high, and it gets really tough to manage a position. So as we said, we had that 1 hour. I'm still going to go after this example from yesterday. We had that 1 hour buy. So we'll just go ahead and call it 1027. All right, initial stop had to be below this low of 9, whatever that low was, 980. Okay, and now what do you do? So I'm assuming you went in with more than one share because we're looking to, excuse me, scale in and out of things. So this would be a great area, as I showed you. At least up here, you know, when we hit that harmonic twice, you can always lock something in or at least raise a stop. If you're locking something in, that's fine because now you take off a portion of your position and you move your stop up also. Worst case is you move it to break even. So you'd move it, let's say you entered at 1027, you take something off here, you move it to break even. Conversely, if you're still in more bullish mode, you get this potential double top on the 15-minute, you move up your first portion of the position to 1044. You start getting a close below 1044, confirming a double top, you take something off and lock in part of that move. And then you can still move the remaining part to this 1027 area, so you're not going to risk money. So you either lock something, now if you just lock something in, fine, and your stop's at break even, you move up a stop conversely, and you never took something off, well, your stop would be at around this 1044.50 area. And then tomorrow, you know, you're going to keep ratcheting up the stop. You should, at worst case, though, at this point, not lose anything on this position. Should we roll over tomorrow? Should the NASDAQ get weak? This is where locking in something is great because you lock in a price and then you're like, oh, okay, Fine, we continue higher. I'll just keep riding my rest of my position higher, raising a stop. If we roll over, I've locked something in, and worst case is I'm limiting the risk on my remaining position. Versus the person who's, do I get out here? Do I get out if it drops below here? What? Well, if I get out, or if I take something off here because we hit some resistance, then what do I do? Now, okay, I got it back out. Now tomorrow's bullish. Do I get back in? What do I do? Because now they've put themselves in a binary position, 1 or 0. If they took something off and it continues to rally, they're constantly looking to get back in, even if they don't have a potentially good setup. They're just looking to chase the market because they already took something off. And all right, well, wait, it's still going higher. I got to get back in. I don't want to. I don't want to leave again. I don't want to leave money on the table, which is a very uninformed trading mantra. I don't want to leave money on the table. That dooms a lot of people. So this is where if you learn to take something off and then trail, you're still in the best of both worlds. Because, all right, let's say it goes higher. You're like, oh, well, I took something off. Fine. You locked in some profits. Now it's continued higher. You still have some on. And it's easier to add back when you have something on because you're not forced to find something. If you can't find an entry, you still have something on. If you do find an entry, well, then let's say you had 2 shares, you took one off, it goes higher, you get, okay, we got to pull back to whatever buy signal you have. All right, I'm going to add back that 1 share. Whereas once you're out, and if it continues in the direction, you're then, okay, I got to get in, I got to get in, I got to get in. Or, the name of the game is to ride a trend as long as possible. So I want people to start thinking about that, which is trading. It's again the overall concept. We even touched on this about trading around a core position back in market overview, but that's from a professional standpoint, that's the best thing to do rather than stop thinking all in, all out. Start to learn to scale, get in at an entry signal, then scale out of your position, and you can always re-add to part of what you scaled out to on new buy signals should the trend continue. Would you manage to buy differently with the double top in play now? The 4-hour buy. I just keep an eye, and depending on where you got in, if you got in on a 4-hour signal, which the 4-hour signal was on this close and a little tighter to the market, I got to give a little more leeway, okay? Now, if we start breaking down and trigger, this is where if I was in on a 4-hour signal and we start breaking down and the market's breaking down, we triggered a double, that's where I could be, all right, I'm getting out and I'm watching for a re-entry because I'm not going to risk a lot. All right, because I can watch for a pullback. Then if I get another buy signal, I'm back in. I'm just not going to risk a lot at this point because it's already moved and we're not in super bullish mode yet. So the double is just going to be used to manage a risk level. However, see on the 4-hour, you have to be comfortable with your risk, and the stop is still below this 980 level. So hopefully you position sized correctly that even if your initial stop was here, now if you're active, I told you how to do it, but if you're just not that active and all right, it took a 4-hour or a daily buy signal, your stop's still down here. There's no reason to raise it yet. You could easily complete this double and then move back up. I mean, let's just see. I just want to take another look at something. And look at this. I mean, you gotta love the way stuff works. Look, so this is what I was wanting to check out. Here's the move from the lows to the most recent highs. Here's the 62.5, and we've talked about this so much. Look at where the double target is. Is it in front? You could technically trigger that double, come back down, rotate back up, and not even close below that 62.5 possession, and that would just be a normal pullback between the 50 and 62.5. So do you panic out of a position on that 4-hour? I wouldn't. If you position size correctly and accepted your risk, that your stop's down here. Now, if you went all in like with way more size than you should, then it's a whole different story. Okay, that's where managing your position is really strong. Let's see, I'm not that. It's only taking me. It's only taken me 6 months to really grasp the value of stop management. This stuff is so key to successful trading in the markets for a living. Yes, it is. Managing risk, managing stops, and learning how to not put yourself in that binary position. Okay, because you're never going to buy every low, you're never going to sell every high, and you're not going to buy the absolute low to the penny and sell the absolute high to the penny. If you do it with sheer luck, you can't count on that. Even you can't count on selling every top near the top and buying every bottom near the bottom. It's not going to happen. Oh, unless you have some miraculous system. But if you have a system that good where you can actually buy, like I'll show you, like sell, buy, sell, buy, sell, buy, sell, buy, sell, buy, sell, buy, sell, buy. If you actually had a system that good, I will introduce you to people on Wall Street who will pay you more money than you could know what to do with if you have a system actually that accurate. Because that is simply, you're not going to do it. You're not going to buy or sell every swing high and buy every swing low. And if somebody tells you they have that, then they're not sitting here streaming on YouTube unless they're selling you a bill of goods, because you know you have something that accurate, then you've either sold it to one of the big uh, firms on the street, or you've gone private with it with a and it's trading private equity. Okay, so that's where stop worrying about buying every low, selling every high, and start learning how to manage positions with your entries and manage stops and getting out of partial positions along the way as it's going in your direction. Because once you're down to your final lot or your final share, you can always get extra greedy, just never turn that final lot or final share into a loser, but you can always ride that longer than you ever thought. And you can always add back in on another entry signal. That's what people don't think about. You know, you get in with 10, you get out with 5. Oh, wait, I got another buy signal. Get back in with 5. Now you have your full 10 on again. Or whatever it is with your risk management. All right. Uh, Also, I could use some thoughts on choosing option expirations with different buy signals. Again, that's a whole nother aspect that we'd probably have to do a different live stream on, and I don't have time to go into that tonight. We might want to put something in Discord on that. That's a whole nother topic. I mean, I could go on for an hour or two just on that. Top and bottom searching is futile for sure. My only interest is taking a chunk out of the middle time and time again. Again, it's like baseball. I don't care if you don't like baseball or not. It's a great analogy though. It's some of the best players went up to, it's not that you hit 50 or 60 home runs one season and struck out a bunch of times. What are the best, most consistent players? On base percentage. How much are they on base? It could be singles or doubles. They're not swinging for the fences every time. They're looking to get on base or advance other runners forward. That's what makes some of the best baseball players there are. Not the ones that might have 1 year where they hit 50 home runs. The next year they have a batting average of 190 and they're striking out all the time because they're always swinging for the fences. If I had a system that good, I would not be in this YouTube channel. If I had a system that good, I would own an island. Okay? I've never seen a system that good. I've seen some really interesting stuff out there that the general public wouldn't see, and I've never seen anything close to that good. So yeah, Jake, that's just a whole nother, because you analyze the underlying and then you have the whole aspect of options to consider and what strikes, what expirations, and all right, are you going, what are your delta expectations? How are you timing stuff with theta? How are you? That's where you, and if you don't know the Greeks and options, and you really need to start investigating delta, gamma, and theta and vega for volatility, because all your outlooks on not just the underlying market, but what do you expect for implied volatility? What do you expect your time frame comes into play with theta, because you don't want a lot of theta burn if you're putting on an option strategy that you're long theta. You don't want a lot of theta burn because that can eat into your position quickly. So you have to know that, especially with your expiration times. Coco, watching for a clear break passes 1080 to 1100 resistance area. Once that breaks, targets are 1200, 1290, 1493, and 1695. Okay, so those are much longer targets. Okay, so I'd still, if you're trading, and what are your stops? Do you know your stop levels? Where, if it rolls over, where you're wrong? So you have your targets down, which is excellent. Now, where are your stops? Where's your line in the sand also? And you're on a much longer, that's a daily to weekly to monthly time frames. So those are great. They reiterate singles and doubles. That's what keeps you in this business a long time. That's what keeps great players not getting traded. You're a great, a great leadoff hitter, and you just get on base all the time. Wow, you can stay with that team for a long time. VIX and options price seem very correlated. Okay, well, VIX is the uh, implied volatility of the OEX. Well, it's really the S&P options, the OEX options. Okay, so that's implied volatility of the overall. We'll just put it with the overall market for right now. So when we have if it's spiking up, it's generally when the markets are selling off because there's risk associated with that. But when overall market volatility goes up, certain high flying stocks will go up with it. Versus your more pedestrian stocks like Coca-Cola might have a little increase in implied volatility, but not as much as Tesla. So yes, implied volatility with a lot of, especially the high flyer stocks, will be much more correlated with things like the VIX or the Vixen. But then stuff even beyond that can have its own nuances, like Tesla during certain periods can get completely decoupled based off individual stock risk from the VIX. More and more so recently, it's been more coupled together just because you have the broad market affecting a number of stocks, like especially high-flying tech stocks. So you're going to see a lot more correlation between market volatility and individual stock implied volatility. Learning to watch lots of different things is very valuable. Yes, it is, because you start to see some correlations. You start to see, it's just like watching multiple time frames is valuable. Once you get multiple time frames down of the stock, for example, Tesla, we watch the 5, the 15, the 1 hour, the 4 hour, the daily, the weekly. Well, then, I've got that done. Okay, let me check in on what the Nasdaq's doing, what the S&P is doing. Okay, then all right, I've got that down. All right, let me check in on what the notes are doing. We've started to cover that more often just because of where we are in the markets. What are the notes doing? All right, I've got that down. Now, what's the VIX doing? And then what's like the tick and the trend doing? We have yet to go into that, and I will at some point, but you can start watching that for clues. So there's other things you can really start to roll in that even if you're just glancing at it, like once an hour, I will do a sweep of everything that I will go through sort of my checklist. All right, let me check on this. 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 And just to make sure, and it's not an in-depth analysis. All right, let me glance. All right, all right, that's where this is. That's where notes are. That's where the Dow is. That's where the VIX is. That's where, whatever else is. That's where crude is. Tesla forming an inverse head and shoulders like NASDAQ and S&P 500. An inverse head. This would not be an inverse head and shoulders to me. Downward sloping neckline, and it's not reversing a big enough move. That is, and if people are thinking this is an inverse head and shoulders, it is not. Okay, it's people trade a lot of stuff, especially since, you know, trading and the internet has become a lot more popular. People come and spot patterns, or people reiterate patterns all the time that are not true patterns. And if they think they're the pattern, they don't test out well. This is not, even if this rolls over, is not a inverse or a, this is not an inverse head and shoulders right here. Why? Because it's not reversing a move. This is not a proper head and shoulders. This is not an inverse head and shoulders. Okay, you don't have a shoulder here, a head here, a shoulder here. Why? Here's the move that started it. Inverse head and shoulders is a reversal pattern. It is not, this would be a continuation pattern. If it goes to new highs, this is some kind of continuation mess. It's not an inverse head and shoulders. I will go through that all day long. It doesn't matter what somebody calls it, it isn't. Reversal patterns have to reverse a move. Over 1080, well, they will run this to 1100. Over 10.8, well, again, I'm at the next little resistance. I'm at 1078. And then we have this little area here, but then we have nothing. We have a clear path. Above 1100, we even have a clear path. So, you know, if it starts getting momentum to the upside, I could see 1134 easily. And because you're in a big area clear path, and this is a 1 hour. So let's see. I'm still waiting for that level to break to the upside this week. Well, I'm glad you have your plan, Wavy, and I'm glad you're sticking with your plan. That's what's important. Everybody here should have their plan. What about the NASDAQ? Let's see. We have, here's where it's a, which is your shoulder? Because, all right, this is your head. You'd have to, this would have had to be your shoulder, but this would have invalidated it. The NASDAQ's at least reversing. I'm looking at the bigger picture now. On the 4 hour, if you're calling this a shoulder, and this is the head, yes, it's reversing enough of a move. See, this is reversing this move. So if we're looking at this, there's your neckline, shoulder, head, sloppy shoulder. It's a little tough to see here. It's not the best formation, but if we're doing our projections, well, let's judge it. We got to come there, and then, hold on, I got to turn off my magnets. And I got to get to, it's the same targets, tested out the same as double, interesting enough from a reversal standpoint. But this would be from where it broke. So is this move, are your targets within the move that started it? Yes. So this is a horribly sloppy one. However, that's at least reversing this move. What's interesting to me is even the first target is within the 62.5, so you could hit your risk reduction on this inverse head and shoulders and still roll over and without even getting above the 62.5. But this is more valid, yes. This versus what you saw in Tesla are two different scenarios, because this is actually reversing a pattern or reversing a move. Confirmation bias is another beggar, has to be shooed away. We see lots of patterns that don't exist. A lot of people want to see what they want to see, and will say, especially after the fact, they'll say, oh, that was this. Oh, that was this. I was expecting that because we had this kind of pattern. And it is confirmation bias. It's why we also, one of the things we strive for on this channel is we analyze both the bullish and the bearish case. All right, it's like what I just asked. Coco has he gave his targets the upside. Now, what are your stop levels? I want you to make sure you're not just going with blinders on and saying, okay, I only have upside. Where are your stops? If you're long Tesla, what are your stop levels? Okay, so that's what's key. It's not getting sucked in, and that's a great point, Sterling. Confirmation bias. You want to see things. It's like people watch. We're not going to get into politics here, but people will pretty much only, a lot of people, not everybody, watch what they want to hear. People that support their own viewpoints, like for politics. And it can happen, especially with stocks, where people, I'm bullish Tesla. I don't want to hear any bad news on Tesla. There's no bad news ever on Tesla. Elon's the best thing since sliced bread, and Tesla's going to the moon, and it will never go down. And then there's people who say everything's wrong with Tesla. They make junk cars, blah, 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 blah. They're way overvalued, and it shouldn't be trading at this levels, and I don't want to hear anything good about Tesla. Well, neither one's correct. But if you're stuck in always the bearish or the bullish camp and you're not looking at both sides, then you're going to potentially get that confirmation bias, and you're not going to see, you're going to get a scotoma, all right? And once you develop a scotoma, you don't see what's right in front of you. You actually don't start seeing the patterns that go against what you think should happen. You don't see it, and even though it's right in front of your eyes. This is a messy pattern. Well, this is a messy pattern, yes. And Tesla is a very messy pattern right now. It's just in a huge, coming back to a weekly rotation zone, and now just in this major consolidation pattern. But at least when you step back, we still have a potential double top, still not invalidated, and we have a rotation zone. So from my perspective, we start breaking down below the rotation zone on a weekly basis. I start watching for potentially lower prices. Until that happens, we're still in longer term bullish mode, and we're back in bullish mode on the daily, but we had buy patterns before then. So target can be 16,500 on the NASDAQ. Coco, it would be 16,337. Don't make a target that's not there. The target, and it's just like a double, the target is 16,337. And then it's over. Now you have intermediate targets of 16,027, 16,182, 16,337. Why? Stop reduction, which means you raise the stop, partial profits, rest is out. Inverse head and shoulder on the daily. Again, you don't have one on the daily for the NASDAQ at least, because there's nothing here inverse. This would have to be the head. This would have to be a shoulder, but you're not reversing a move. You're not reversing a move. The move would have to come from way up here, and this wouldn't be a shoulder because this is now this is a double hunchback shoulder. There's nothing there. And this is not, on Tesla, you can't go shoulder, head, shoulder. It's not reversing a move. Echo chambers undermine open-mindedness, and it's one of the big problems, in trading. Everyone hit the like button before you leave. Thank you, Sterling. Again, that's Tesla. You still don't have anything, Coco. You don't have anything reversing. You need a move from much higher. In order for this to even if you didn't have a double shoulder over here, you'd need a move from all the way up here to make this pattern. Okay? So this is not an inverse head and shoulders. This is just a return to the weekly rotation zone and a big consolidation pattern in the macro sense. And you see even here on the monthly, take away more noise, return to the top of the monthly rotation zone, and now it's just moving sideways. Here, this helps you see it even more. Let me take off this. What's this? Up move, sideways correction, up move, retracement correction, up move. Little retracement, but really based off candle bodies, a bigger sideways correction based off this rocket ship move up there. And you can even see the double right here on the monthly. But overall, this is still potentially a sideways correction from this high. Other than that's why it's a consolidation pattern. It's not anything else also. All right. I think I've gone over enough today. By the way, please do also go back if you didn't watch the market overview. I think it's really helpful to take the 1 hour out of your life and just hear, the discussion. There are some great questions in it from today, and it will help you establish sort of a macro perspective for the next year from Bob's fundamental viewpoint. And I think we had a great back and forth, and there are a lot of great questions from people who are attending it live. So please take the time out. And if you do take the time out and you like that and you want to see more of that kind of content, leave comments and like it so we can get wider distribution. All right. So I'm going to call it a day for now, and I will talk to. Is it posted? I don't see it. Let's see. I see it on Pure Exposure. Let me take a look here. Market overview streamed from today. Yeah. Today's the 11th. I see it right here. Yeah, special guest Bob Iacino. It's up there. It is up there. So go watch it, please, Raj. Thank you for being here. Yes, it's take the time, well worth it. Thanks, Shashi, for being here. Thanks as always. Cheers to everybody. Okay, maybe a delay on my end. Just keep refresh. It's there. Or go watch it on the Pure Exposure YouTube channel. I don't care which one. Go watch it on ShareVision. It's up there too. I streamed it to multiple platforms, so you should be able to find it. But please do take the time, and please, if you want to keep supporting the channel, at least leave a comment and a like or something. I'll talk to everyone later. I gotta take it easy now for a while. Bye for now.